Yes, there we go. So, hey everybody, thanks for joining it to our bi-weekly commercial call or online meeting. Thanks for being here. We're gonna open up with Johnathan Razbannia. Give us some background about yourself, Johnathan, and I think you can share a screen and give us more updates.
Perfect. Let me just do that. Hold on. Should be coming in a minute.
Yeah, we can see your screen.
Okay, perfect.
Yeah.
Just gonna start the show. Okay, perfect. Well, I just wanted to thank Kim and David for having me as your guest today. We work with several different brokerages, and we add a lot of value to different teams. One of the primary aspects of our business and support is property tax resolution services. And we've been doing that for more than 15 years. And as far as our experience is concerned, we have, with our staff here, we have over 40 years of experience of working with property tax assessment appeals. And it's something that I think is going to be very important for, I mean, as we read the reports in the local markets and nationwide, especially with the interest rates going up, there's definitely going to be a delta with people that have bought properties, let's say over the past anywhere between the last 3 to 5 years. Right now, you know, it's cresting at an all-time high with a lot of the purchase prices, but we're definitely seeing some adjustments in the market, and we are gearing up for probably in the next couple of years for some sort of market correction. And I did, you know, I spoke to David a number of times, and I definitely wanted to get in front of you guys and, you know, especially a lot of other brokerages, because it's really important to know it's not like our services are not just in a declining market. We as we go throughout our presentation, we'll kind of highlight all the different things that how we can support your team and your, you know, buyers and sellers. So I'll kind of go through that. So basically, we assist small to medium-sized businesses on day-to-day matters. And our firm, we go in front of the Assessment Appeals Board, Board of Equalization, different counties. We work up and down Southern California. We're expanding to Northern California as well. But right now, primarily, we are working in the Southern California markets. So Orange County, Los Angeles County, Riverside, San Bernardino, Ventura. Those are our primary markets. We have 30 years combined experience in assessment appeals. One advantage that we have over a lot of other firms, we've been working with appraisers, especially a big bulk of our business is LA County. So they know us pretty well. And one thing that is important that we've added actually recently over the past month, which we are proud to announce, that we actually added a former LA County assessor that used to work for the LA County assessor. Now they're working in our office. So we have, we believe we've added quite a bit of firepower to our team. And that's really important because we know, you know, we kind of understand a lot of the ins and outs of the assessor's office, and also basically helping us strengthen our work and making it so that it becomes not bulletproof, but it gives us a competitive advantage over a lot of other firms. So as far as the way reassessments work, I'm sure most of the people, most of the team, I don't want to make assumptions, but I'm sure that a lot of people at your firm They have worked with other firms with property tax assessment appeals, but some may or may have not. So I'll give you kind of a broad overview of how that works. Typically, when we engage in assessment appeals, a client will come to us. We'll do an analysis of that property and make a determination if it's a good candidate to file for appeals. There's a lot of companies out there that do a lot of mass marketing. Like you'll see a whole bunch of flyers. I'm sure that you guys receive them on a daily basis, or your clients do, that say, hey, you know, we believe there's something here on your property, and you know, we believe you should file. But one difference is versus us and like mass marketing companies is that we give you a more of a personal, tailored experience where you work with our team and we give you guys updates. We're accessible. It's not like you're a number. We try to give you, every single client gets personal attention, and we build relationships. That's one of the biggest things. Just working and building relationships with either the buyers and sellers, or the brokers. We try to have that personal feel. So just making you guys feel comfortable and working with us. So property tax, the way that works in California, there is Proposition 13, and a brief overview of that is the way Prop 13 works is when you buy a property, I think a misnomer is that whatever you pay for, that is what's going to be enrolled, but that's simply not the case. Every single property in LA County typically has, they do what's called a transfer analysis. So they'll look at the transfer and see if it's an open market transaction or not. And if it is, and it's under normal market conditions, then Prop 13 will kick in, and that will become your base year. So if you bought something, let's say for easy numbers, for $1 million, then that would be your established base year at $1 million, and then you're capped at a 2%, up to 2% increments depending on the market conditions. So that's typically how Prop 13 works. Now, California has what's called Proposition 8, which allows us to file for a temporary reduction in value. So especially right now, as the market conditions kind of are gyrating with the interest rates, and we've seen a difference of spread, it's a good opportunity to look at all and anybody's portfolio. So anybody who's bought, I mean, even beyond 5 years, really, it's good to always check and see whether or not they are being overassessed. And what we do is we will typically, our clients will send us a spreadsheet of the properties if they're income producing. We ask for the P&Ls and also rent rolls, so we can see how the property is performing against the market. And then, we'll do an analysis and give you guys an opinion as to whether or not we feel that it's a candidate to file and move forward for a Prop 8 reduction. So we see that coming forward, especially in the 2022 year, and really more so coming up in 2023. So we are gearing up in large numbers to do that. So as far as how we can help with property tax, there are different categories on in which we can help. So we just talked about the Proposition 8, which is what we call market value cases, where we'll do an analysis of how the market is performing against the assessed value. Secondly, which is really big, is the new construction cases. This isn't something that all firms can do. Some choose to do it, some don't. It requires quite a bit more analysis of what the market value of the property is on new construction. So if someone built a property and they get a supplemental bill. So timing really becomes important on this, and we'll touch on that, but I'll give a brief overview. Typically, you have, on a new construction case, once you get the supplemental bill, you have 60 days to file, which is really, really important. I can't emphasize that enough. A lot of people, they just Either their address is not correct. So it's really important that when you're building a property, that the supplemental bills or all bills are going to a location where your client can get them. We have 60 days. So if you're in a disagreement with that, in order to protect your new construction, you have 60 days to file on the bill. Another big thing that we work on, which is huge, is change in ownership. So this happens often in also commercial settings where you have partners that may, one partner comes out, or you may have a change in legal entities. So we've seen this quite a bit where, someone bought a property, let's say in 2005 for, again, I'll use simple numbers, $1 million. And then they ended up recording a grant deed, and the assessor's office doesn't know much about it. So that million then becomes 4 million. So all of a sudden your $12,000 assessed value becomes like over 40,000. And if you don't have the proper guidance, then it can put you in a lot of problems. Then you start getting default bills, you're not paying it. So that's something where our firm has helped a lot. And I mean, we've saved people millions of dollars, really on the change in ownership. Misfortune and calamity is another big one, which is a sleeper. A lot of people, when I can give you a prime example, like my home flooded about a year ago. A lot of people don't know that if you have damage, whether it's a commercial property or residential property, you have the opportunity of filing what's called a misfortune and calamity. You have 12 months from the date of loss to file what's called an MNC filing. And if you do not get it within the 12 months, you cannot file. This isn't something where you can necessarily file an appeal on. We have to get that filed with the assessor's office. You got to get it certified, so you make sure that that is locked in. We worked on a lot of, for example, Malibu cases where people, lost, their home didn't quite burn down, but we ended up saving people a lot of money on that. So we'll work with the taxpayer and try to provide the assessor's office, work with them to maximize as much as we can to save. So it's really, really important. This is a sleeper, misfortune and calamity. A lot of people just don't file on that. Another big topic is the base year filings. Let me just kind of go into that. For the base year filings, the way that works is, let's say you bought a property, like a commercial property. This happens a lot actually in commercial properties. So because there's a lot of pocket listings and they're not necessarily open to the public and they're not marketed 100% or on CoStar or on LoopNet, the purchase price often is not enrolled by the assessor. So let's say it's a pocket listing and it sells for 5 million. The assessor reviews it, they don't know much about it, they put it at 7 million. So that's something where you're not in agreement right off the bat with what the assessor has enrolled with what's called the base year. So you have the assessor's office allows you 4 years to do that, but our recommendation is when you get the initial supplemental bill, that we can analyze it and see if the base year has been enrolled properly. If not, then we can file on the supplemental, so it protects you from the very, very beginning of the tax roll. So that's what's called a base year filing, and you are allowed 4 years to do that. But the later you file it during the regular roll period, which the regular roll assessment appeals on a regular roll bill opens up July 2nd, and depending on when November 30th falls, it either is on November 30th or December 1st. That's your open period of the assessment appeals. So when you're looking at that, let me go into the key time frames. So supplemental assessment, your supplemental assessments, you have 60 days to file on it. The misfortune and calamity, you have 12 months to file on it. And on your base year appeals, you have 4 years from the purchase date. The regular assessment appeal filing is from July 2nd to November 30th. And then, but some counties, for example, like Ventura County, have a filing deadline of September 15th. So if you go beyond that date, then you no longer can file an appeal. So it's really important that you should know which county that you're looking to file an appeal. And if you have any questions, to let us know. I mean, we're a tremendous resource. And I think that it's also important, whether or not anybody's looking to file an appeal, to ask questions, because things don't come up until when they're actually in a point where they're past deadlines. And then it's hard for us to try to like revamp it or to get in there and timely file an appeal. So we always encourage everybody that any property where they feel, hey, you know, let's review it. There's a no cost, with the way our services work is any type of property that you want us to review, there is no charge for us to review that property initially. So you'll send us an email or give us a call and you say, hey, Johnathan, there's a couple of properties that, you know, we're concerned about, and can you guys give us like an analysis and let us know whether or not there's room to file an appeal or not. So we'll go ahead and do the analysis and then, you know, give you a response as to what we feel is the strength of the case to move it forward. So we add quite a bit of value, and also giving value to your buyers and sellers. So people that have purchased property and they are worried about the market conditions, it's always an added value to know that, hey, you have a support team. Like, we're kind of like the back office. So we're like kind of a back office to you guys and can give guidance. It's tricky. Like it really becomes tricky because there's a lot of things within the assessor's office that takes years of experience to learn. There's certain coding that it's important that we understand. And also, like, even if you guys have started processes with the assessor's office, with the legal services or ownership division, anybody who's dealt with this knows that their time frames, they don't have, I mean, the problem is they're very understaffed. People that have started the process, especially working with legal services on change of ownership, they are often like stopped in their tracks. Like, it takes them a long time because they don't know who to talk to. And by the way, knowing who to talk to is really important. You don't want your file going somewhere that's not supposed to. Or another big thing is giving information where you should not. Like, some people feel like, hey, they could be savvy and they're smart, but giving information to the assessor's office, that can be detrimental to your case. You know, like maybe giving a rent roll, maybe giving information that the way it's put together, it's not beneficial to you. So we kind of will vet that, and we'll try to, like, our job is to protect you. You know, we want to make sure that we're like a filter, right? We don't want things to go out where it's unnecessary. So we're trying to give the team that full support. So that's something that's really important to understand when you're working with us. Another thing that we do, and which really comes up in commercial properties that a lot of other firms don't do, is we forensically audit a lot of these bills. There is certain categories in these bills that are not tied into assessed value, but are called sanitation fees. That's a big thing where we've saved our clients tons of money on reviewing their bills and reviewing their water consumption. So a lot of like if you notice, there's a lot of properties that are sold in Huntington Park, certain areas that have sanitation fees and they're large, or car washes or different things that have sanitation fees. We can also review that and try to maximize any and all savings back to the client. So these are just some of the things where, you know, we can help you and guide you guys and to make you guys feel more comfortable. But that's kind of like the general overview of what we do. And if anybody has any questions or anything like that, I'm here to help you guys. Anything here today or anything down the line, we're open. We can also provide this presentation to you guys. So if you have, you know, I know I kind of go through things very quickly, but we can provide that presentation so you guys can spend time and go over it. And then, you know, if there's any questions that you have on your spare time, you want us to help you with, you know, we're here to help. But at this time, like I can open it up. If anybody has any questions, I'm here to help.
Johnathan, awesome presentation. And please, if you can send it to Kim, we're definitely going to share with the group and with our entire commercial community. Absolutely. It was very informative. Guys on the call, questions, you can type it in or just unmute yourself and ask, please.
This is the time, guys. If you have some good questions, as we go into this market, this market transition, there is a lot. I'm telling you, like, as you, I don't know, like what kind of all the properties that you guys support and that you guys are marketing, but it's really, really important going into this next 12-month period and the deadline, November 30th. Like if you have any clients, or even if you guys have your own properties that you own, that you want us to do a quick analysis on it, it's 100% worth it. You have nothing to lose. And it's, if you can save a couple $1,000s and add it to your bottom line and reinvest it in your property, you shouldn't let the money just go to the assessor. I mean, it's money that you'll never get back. I mean, just to try to get money from these people, it's so difficult. So it's worth the time to really go through it.
I do have a question.
Sure.
I have some different contacts and people that I've worked with before who have the majority of their investments in Texas. And one of the things that one guy was telling me is that it's just a common thing that they have tax consultants on their payroll because they're always having to fight the property taxes and just try to dispute them and get them lowered and all of that. Is this a similar type of situation?
What state? You said Texas?
In Texas, yeah.
Oh, Texas. I mean, I'd love to get in that market. That's like the gift. They call it the gift that keeps giving. The problem with Texas is they have a mass appraisal system where they reassess every year. So what happens is that like the market and their tax rate is so high. So like where we have a 1% general levy, I believe they have like a 2 or 3% general levy. And they get reassessed, like they don't have any Proposition 13 protection or tax cap. I don't know exactly if that's true, but that's why they have to be on it like all the time because they have no protection. So in California, it works a little bit different. We have what's called a Proposition 13 protection, but then again, we also have a 2% rate hike every year. So let's say if someone bought a property for $5 million and they held it for 10 years, that's a 20% added value that's going to get on top of your assessed value. So not only will you have the 20, you know, you'll have that additional assessed value put on there, but if the market drops, you may be like, you may have 20 or 30%. I mean, so we do have, it is a different system, but it is something that people have been filing for years assessment appeals here in California.
Is it as common here for somebody to have, especially investors with multis, like to have a tax consultant on their team to like regularly dispute that? Because that's like, from what I'm being told, these guys, you know, have investments all over Texas, and they just know that anybody going in there just has to put that on their payroll for sure.
I wouldn't say it's common that people have I would say like the real big companies, they may have them on payroll, that they're dealing with the hundreds of millions of dollars. But I mean, some people, they do have them, but there is also a difference between, which I think this is a common problem that we encounter, is a lot of investors typically, like, they may work with their CPAs. And one problem is CPAs, they have knowledge of the tax code, which is like federal and state, but they're not necessarily knowing how the revenue and taxation code works, which that's what we're dealing with. So that's one thing that I think, like, when you're dealing with clients and they say, hey, my CPA will do it. Well, those CPAs are kind of limited on their knowledge on how the revenue and taxation code works, whereas we're more privy to that because we're dealing with that on a daily basis.
Oh, okay, that's good to know. Thank you.
Sure.
Thank you, Gina. Who else? Well, we have Johnathan with this good information over here.
I have a question.
Go ahead, Jason.
Would you be available for like a presentation for a group, let's say, where we're going to be doing some valuations for some of their assets that are no longer be able to service their debt, and we're trying to come up with a plan, but we know it's going to take some time to market them and to sell them. I can't guarantee that it's going to be less than a year.
Sure.
Would you be available for that meeting to come in and say, this is part of, what we're offering? This may be a game plan for the short term. Like, hey, let's look at reassessing some of this valuation here and save you some money on the taxes while we're trying to hammer this thing out.
Absolutely. I mean, they do that on all the time. Like a lot of these properties that can't debt service, 100%. I mean, they're losers. Like they have to. Those are the prime candidates, because if they can't debt service, they have to be looking into filing appeals. Those are the ones that are actually probably the best ones. But those are more on a short term, because they're going to turn it over. But another thing,
they're not gonna turn all of them over, because sometimes the assessed value, the value that we want to take to market is less than they're willing to take, so they're willing to rearrange and basically get rid of some, right, and kind of stabilize their portfolio. But where it's necessary, let's say, they could utilize this to help them out with their bottom line and cash flow while they redevelop the project.
Absolutely. I mean, that's a great point, Jason. I think that's something that you should, I'm open to that. And my primary focus, of course, I'd love to get the business and work with you guys, but I love to educate and to give people the opportunity, right? Because the assessor's office is not here to help the public save any money, right? And frankly, people that the way that they look at it, not everybody over there, is if you have property, they feel like you have the money and that you should be paying your fair share. So it's important to really get in front, and especially as the market's kind of shifting, to help clients, and they'll appreciate that. I mean, if you're trying to like help them in the long run with their property and their transactions, but if you can save them money, like, they're like, wow. I mean, that's amazing, because there's only so much you can cut, right? Like the power bills, the elevators, these are like fixed fees, and none of these things are going down. It's in fact going up. The only thing that you can kind of save on, if there's any savings potentially, is on property tax. You're not going to be saving on interest right now because the interest rates are going up. So where can you try to find something? And that's property tax.
Okay, well, this is currently happening as we are doing more and more of the BPOs. So I'm going to reach out to you and possibly consult with them and have them reach out to you as well. So thank you.
Yeah, of course, anytime.
I had a question, comment. So this would be a great way to generate leads, right? Because what I do is I look at the amount of money that they bought it for, and then I look at, okay, now it's assessed for this amount. And if it's similar, they're good. But if it's higher, then I can contact them and say, you know, it looks like you're paying more taxes than the purchase price you did like 10 years ago, right?
Oh yeah, so are you guys generating leads by CoStar? Do you use CoStar?
Yes, I use CoStar, but I always I never thought of, but I do look at, like, is it assessed the same amount as what they bought it? And so far I haven't seen any difference, but that is a way to find it, right?
Oh, let me tell you, one of the biggest issues, and I think clients will love you for this. It is important. You'll be surprised how many people don't even know what they're getting taxed at, because the different municipalities, okay, have different tax rates. So, for example, if you guys ever deal with commerce, has anybody here ever dealt with the city of commerce or industry? Have anybody dealt with industry? Industry is one of those markets in California that their tax rate is 1.8. So they're like, typically it's not every single city that a lot of people think, okay, 1.25, that's what it is. It's not true. You have a range from like typically 1.06 to 1.8, like Huntington Park. Huntington Park, I know your team deals a lot with Huntington Park. Huntington Park, their tax rate is like 1.4. So if you save them money on a Huntington Park property, you're saving them a lot of money because their rates are high. Compton's rates are 1.55. Like their rates are high. So, but on the base value, people don't check their bills. They just don't. All they do is a lot of them pay their bills. But are they really looking like, hey, I bought this property in 2020 for 1.5, but the assessor actually didn't enroll 1.5, they enrolled 1.7. If you don't catch that, that bill is going up incrementally 2% per year, and you only have 4 years to file on a base year. So it's really important to anybody who does a transaction, typically the assessor is about 6 months behind on the supplemental bills on a base year. So, and if you don't, you cannot, another important thing to note for clients is you can't assume that just because you didn't get your bill, that a bill is not out there. So it's important to do what's called tax monitoring, because in the Revenue and Taxation Code, it is the taxpayer's responsibility to pay the taxes. If they don't pay, they're subject to penalties, and the penalties are big. Penalties right off the bat, like if you don't make the payment, is 10%. And then if it goes into default, the default starts after June 30th. So beginning July 1, you're going to start getting taxed at 1.5% per month. So you should remind your clients that when your property, if you buy a property, you need to be on top of your taxes, or else, you could be in a penalty situation. And by the way, the banks right now are being very, very aggressive on notifying their borrowers on tax defaults. So if you're not paying your taxes, there may be an acceleration clause in the loan documents that can cause a problem on those ends. So these are kind of like pointers I'm giving you guys that just like on a typical run of the mill, they won't tell you. I mean, tax consultants they're not going to tell you this stuff. This is based on their experience. So those are kind of some additional points.
Okay, and so you were about to go into asking me if I use CoStar
Yeah.
regarding if I wanted to find leads.
Mhm.
I would tell my buyers all the awesome information you just gave us, because that's again letting the client know that, okay, I have all this knowledge and I want to make sure you're really rich, and and I can help you become richer. But you were about to say something about CoStar, and how can I find if there's a mistake, if the tax assessor's office is making a mistake on the value of the property, and I can call this contact and say, look, I found this.
Yeah.
Is it done through
I mean,
CoStar, or-
the way you can do that is like when you're going in CoStar and you're doing your mining, and you can also talk to your CoStar rep, and he'll kind of help you do this, but you need to I think you have to set your filters in a way that I'm not an expert in CoStar, but I mean,
I'll find out.
Yeah.
Okay,
I would talk.
fantastic.
Yeah, I would talk to your rep. Listen, there's a lot of opportunities. You do another thing that happens is on these people that buy their sales, like trustees. Okay, like trustee sales, for example, death, properties that have sold, people that have died. So this is another thing. So let's say, for example, there's a property that has someone died as one of the members of an LLC, then those or not an LLC, it's a husband and wife and one died, it's a commercial property, that's subject to reassessment again. So they call it a 777 code, and those are real big ones right there. When you see properties, conservatorships, deaths of tenants, those are all properties that can be reassessed.
Okay, thank you.
Sure.
Good questions. Thank you so much. Anybody else? Okay, Jonathan, please send us this presentation, and that was brilliant again. Thank you for your time. We're gonna have you again soon at some point.
Yeah, anytime you guys want me to, have any more presentations, just let me know, and I'll be happy to work with you guys, with Kim, and we can set up something, and here to just assist you guys. And I'll forward my PowerPoint presentation to Kim. So if she wants to distribute it to anybody, you're more than happy to do that. And if you guys have any emails or anything or questions, just feel free to call me.
Awesome. Jonathan, thanks again. Much appreciated. You can stay on the call if you wish. So Kim, what do we have next?
We were just going to go over some buyers' needs, any updates anybody has, what they're seeing out there.
Sure. Anybody want to pitch their listings or any needs that you might have? Go for it.
It's a quiet bunch today.
We usually have David with the list, but he's traveling today. Anybody, anything? We also have Manti. Are you there? Are you still in New Delhi? Manti went travels to
Yes.
India. Oh, you're here.
Yeah, I'm actually still in New Delhi. So I did a very good meeting earlier today on on syndication, and I was very interested in that. So that was a good thing. And I'm looking to buy apartment complex with syndication. So working on that. Let's see how it works.
That's great. Thanks for jumping on the call from India.
Yep.
Much appreciated. Who else? Anything else that you guys want to share with the group? Or any questions? Okay, Kim, next meeting.
Our next meeting, yeah, it's August 23rd. And I think you'll be at Mega Camp that day, Meny. So David Ishar and Omid will be leading the meeting. And I know David has a guest lined up for us, someone from KW Commercial. So we'll get some more updates from
Yeah,
him.
we're gonna be a few hours ahead of you in Austin, Texas, in Mega Camp, but we're gonna jump on a call and try to catch some interesting guests on the floor to say hi to you as well. So that's in a couple of weeks from now. All right. Well, thanks everybody. Kim, thanks for assisting. Johnathan, thank you for your time again. And we're gonna share the presentation with all of you and the recordings of this session later today.
Perfect. Thank